So don't be fooled by the advertisements that look too good to be true. Usually the products are not very good, and they wind up costing a whole lot more than the original advertised price. And like we said, give us a call, and we can tell you about any other advertised product out there. Even if you never invest in our program, we'll be more than happy to help you. Now let's move on to some specific points that'll help you to become a better Forex trader. First, you need to understand that every successful trader treats his or her trading as a business. The Forex is a 24-hour market, but this doesn't mean that you have to spend endless hours in front of your screen slaving over your currency charts. It simply means that you take a systematic and disciplined approach to Forex market opportunities. In order to do that, it's critical that your trading approach embodies what we like to call the 4 C's of trading success. First, you need confidence. Confidence stems from having a method that gives you an edge in Forex trading. The edge allows you to place trades with the expectation that you'll be successful. Remember, there's no substitute for confidence. Second, you need control. When we say control, we mean the ability to execute and manage your investments according to the rules and guidelines of your trading method. You see, you can have the greatest method in the world, but if you don't have the control to execute according to the plan, you have a high probability of failing. Our third C of trading success is consistency. This is the ultimate goal of every Forex trader, and it's the natural byproduct of confidence and control. Finding winning trades is not the difficult part. The hard part is doing it over and over and over again and on a consistent basis. With consistency in your trading, you can make tremendous returns. The fourth C stands for cash flow. Now this may not sound like a principle per se, but we've put it in this list because we need to differentiate between the concept of buy and hold investing versus what we teach in our program, which is generating cash flow in the Forex markets on a weekly basis. So these 4 C's, confidence, control, consistency, and cash flow, are the building blocks to your successful trading business and the foundation on which we mentor our students. And just remember, there's no need to be a slave to your computer. You want to become a better Forex trader so that you can have the time and freedom to do the things that you want to do in life. At Trading Concepts, we've done all the work for you so that you can cut your learning time. Now let's move into the chart lessons so that we can give you some specific examples of what we teach in the Forex Profits Mentoring Program. First, understand that every Forex trade will follow a 4-step sequence. 1. Determining context of the market. 2. Determining a valid trade setup. 3. Entering the trade. And number 4, managing the trade. Let's talk about number 1, determining context of the market. Before we place a trade, we need to determine what shape the market, the currency pair that you're trading, is in, and what approach needs to be taken to trade that particular kind of market. Now this is where so many other programs go wrong. So many of these programs teach inefficient and unreliable methods that are not based on sound logic and price action. Instead, they are derived on indicators and computer-generated formulas and calculations that are usually over-optimized. They will not work in reality. So what you get is this. You wouldn't believe how many traders have come to us over the years, and their charts look like this one right here. They're all over the place, and not surprisingly, so are their trading results. What they think will give them more clarity in their trading actually multiplies their confusion. If the Forex charts you're trading right now even remotely resemble this, we have some very strong words of advice for you. Get rid of all this junk. Clear the slate, clear your head, and start over. We have yet to meet a Forex trader who was consistently profitable by trading a barrel full of indicators thrown on a chart. Successful traders are usually masters of 1 or 2 selected indicators, and they know when these indicators are most efficient. But more, they know the limitations of their indicators, and they know when to switch the tools they use based on market conditions. No tool or indicator is good in all market situations all the time, and it's critical that you learn the difference if you're going to succeed in trading. Let's say, for an example, that you were trading this actual currency chart right here. Now you're getting a sell signal with this oscillator, which is fine in this particular instance. As a side note, why do you need the other indicators piled on top of each other? This is a decent signal from this oscillator, and the trade would have been a successful one. But what happens in a market like this, a trending one? Using the same type of tools, you wind up getting killed. Now, just in case you think that more is better, as you can see, piling on more technical indicators is not any more efficient on this chart, and the end result is the same, another losing trade. And it's the same for a downtrending market. Take a look at these signals. What you have is a few buy signals on these two indicators. The two indicators that you see here, stochastics and MACD, are probably the two most widely used indicators. Again, it's critical that you understand when and where to use these indicators. And more, you need to know when not to use them. In the Trading Concepts Forex Profits mentoring program, you'll learn exactly how to do this. Remember, different market conditions need different tools, and they also need different methods. Without a firm understanding of price action, you'll not know which tools to use. Again, this is where so many other methods fall short. They simply teach indicator signals and not how to understand and trade the Forex. Learning indicator signals does not make a good Forex trader any more than learning how to turn on a light switch makes a person an electrician. Indicators are simply tools. A carpenter with good tools can make good things because he knows how to use and apply those tools. But the same good tools in the hands of a person who does not know how to use them will not make that person a good carpenter. You need to learn what shape the currency pair that you're trading is in, what tools to use to trade that currency pair, and how to apply those tools. In our Forex Profits mentoring program, we'll be with you every step of the way. You will know how and where to use these tools and where not to use them. The foundation that we build here at Trading Concepts is the complete understanding of price action to determine the context of the market. Next, let's go back to what we were talking about earlier, the four-step sequence to all successful trades. Number 2, determining a valid trade setup. Now, if you get nothing else out of this DVD except for this next concept that we're about to teach you, it could very well save you thousands of dollars in trading losses. Never mistake a trade setup for a trade entry. They're not the same. Again, this is where a lot of traders fail. They'll simply trade setups. In other words, as soon as they see a setup according to their criteria, they jump into the Forex, and this is a mistake. At Trading Concepts, we teach setups and entries as two separate concepts, because they really are. For example, we may see a valid setup according to our criteria, and yet still not have an entry into our trade. Let's give you an example of how points 1 and 2 are interconnected and give you an example of what you should not be doing. Now let's take a look at this chart. Here again, we have sell signals according to these indicators, and as you've seen, this would result in losing trades. Here's what you should have known. First, in determining the context of the market, you would realize that the market was in a strong bullish mode. Therefore, your first conclusion, you'll not adhere to any sell signals whatsoever on this currency chart. Remember, as we said earlier, it's just as important to know when you should not be using an indicator. So now we know the context of the market, and we're looking for step number 2, a valid trade setup according to our criteria. As you can see, we do have a valid trade setup right here. We have to emphasize, again, we don't mistake a trade setup for an entry. We have additional criteria that must be met before we can enter the market. As you can see here, we would in fact be long this currency pair. But it's important to remember that in hindsight, this trade would have worked out. However, what if the currency pair would have gone down instead of up? Had you simply entered, once you saw the trade setup, you would have entered a losing trade. That's why it's critical to separate a trade setup from an entry.